Let's start by understanding what credit actually is. Credit is essentially your financial reputation. It's a record of how reliably you borrow and repay money. Lenders, landlords, and even some employers use your credit history to decide if they can trust you with loans, apartments, or jobs. If you're starting from scratch, you don't have a credit history yet, but that's nothing to worry about. Everyone begins somewhere, and building credit is a step-by-step process. In this video, we'll guide you through each stage so you can establish a strong credit foundation and open up more financial opportunities in the future. You might wonder why credit is so important. Good credit can help you qualify for loans, get better interest rates, rent an apartment, or even land certain jobs. On the other hand, having no credit history can make these things more difficult. That's why it's crucial to start building credit as soon as possible. By taking the right steps early, you'll set yourself up for financial success down the road. Let's look at how you can begin this journey, even if you have no credit history at all. Before you start building credit, it's important to check if you already have a credit file. Sometimes, you might have a credit history without realizing it, maybe from a student loan or being an authorized user on someone else's card. You can check your status for free at annualcreditreport.com. If you don't have a credit file, don't worry. We'll walk you through the steps to create one from scratch. A simple first step is to open a checking or savings account at a bank or credit union. While this doesn't directly build your credit, it's often required for many credit-building products. Having a bank account also helps you manage your money and shows financial responsibility. Choose a bank that fits your needs, and make sure to keep your account in good standing by avoiding overdrafts and maintaining a positive balance. One of the easiest ways to start building credit is to become an authorized user on someone else's credit card, such as a parent or trusted friend. As an authorized user, the card's payment history can appear on your credit report, helping you establish credit without taking on full responsibility. Make sure the primary cardholder has good credit habits, like paying on time and keeping balances low, so you benefit from their positive history. If you can't become an authorized user, consider applying for a secured credit card. With a secured card, you make a deposit that acts as your credit limit. Use the card for small purchases and pay the balance in full each month. Over time, your responsible use will be reported to the credit bureaus, helping you build a positive credit history. After several months, you may qualify for a regular, unsecured card. Credit builder loans are designed specifically to help people establish credit. With these loans, the money you borrow is held in a bank account while you make monthly payments. Once you've paid off the loan, you get access to the funds. Your payments are reported to the credit bureaus, helping you build a positive payment history. These loans are often available at credit unions or community banks. If you're having trouble qualifying for credit on your own, you might ask a trusted person to co-sign a loan or credit card application. A co-signer agrees to be responsible for the debt if you can't pay. This can help you get approved and start building credit. But remember, it's a big responsibility for both you and your co-signer. Make sure you're confident you can make all payments on time. One of the most important habits for building credit is paying all your bills on time. This includes credit cards, loans, and even utility bills if they're reported to the credit bureaus. Late payments can hurt your credit score, while consistent, on-time payments help you build a strong credit history. Set up reminders or automatic payments to make sure you never miss a due date. Keeping your credit card balances low is another key to building good credit. Try to use less than 30% of your available credit limit. High balances can signal risk to lenders and may lower your credit score. Paying off your balance in full each month is the best practice, but if you can't, at least keep your balance as low as possible. Regularly monitoring your credit is essential. You can get a free credit report from each of the 3 major bureaus once a year. Check your reports for errors or signs of identity theft. If you spot a mistake, dispute it right away. Keeping an eye on your credit helps you catch problems early and track your progress as you build your credit history. Each time you apply for new credit, a hard inquiry appears on your credit report. Too many inquiries in a short time can lower your score and make you look risky to lenders. Only apply for credit when you really need it and space out your applications. This way, you'll protect your score as you build your credit history. Having a mix of different types of credit, like credit cards, installment loans, and retail accounts, can help your credit score. Lenders like to see that you can manage different kinds of credit responsibly. Don't rush to open new accounts just for variety, but as your financial situation allows, consider adding different types of credit over time. Credit scores are 3-digit numbers that summarize your creditworthiness. The most common score is the FICO score, which ranges from 300 to 850. Scores are based on payment history, amounts owed, length of credit history, new credit, and types of credit used. Knowing how scores are calculated helps you make smart decisions as you build your credit. Your payment history is the single most important factor in your credit score, making up about 35% of the total. This means paying all your bills on time is crucial. Even one missed payment can hurt your score, so set up reminders or automatic payments to stay on track. Over time, a strong payment history will help you achieve a higher credit score. The amount you owe makes up about 30% of your credit score. This includes your total debt and how much of your available credit you're using. Keeping your balances low and paying off debt quickly can help improve your score. Avoid maxing out your credit cards, as high utilization can signal risk to lenders. The length of your credit history accounts for about 15% of your credit score. The longer you've had credit accounts open, the better. That's why it's smart to keep your oldest accounts open, even if you don't use them often. Over time, a longer credit history will help boost your score. New credit makes up about 10% of your score. Opening several new accounts in a short time can lower your score, as it may look risky to lenders. Be selective about applying for new credit and only open accounts when you really need them. The types of credit you use make up the final 10% of your score. Having a mix of credit cards, loans, and retail accounts shows lenders you can handle different kinds of credit. Don't open new accounts just for variety, but as you build your credit, a healthy mix can help your score. As you start building credit, it's important to avoid common mistakes. Don't apply for too many accounts at once, don't miss payments, and don't close your oldest accounts. These actions can hurt your score and make it harder to build credit. Stay patient and consistent, and your credit will improve over time. Setting up alerts for your accounts can help you stay on top of due dates and avoid late payments. Many banks and credit card companies offer text or email reminders. Use these tools to make sure you never miss a payment and keep your credit building efforts on track. Autopay is a great way to ensure your bills are always paid on time. Most banks and credit card companies let you set up automatic payments for at least the minimum amount due. This helps you avoid late fees and keeps your payment history spotless, which is essential for building credit. Reviewing your bank and credit card statements regularly helps you spot errors or unauthorized charges. If you notice anything unusual, report it right away. Staying vigilant protects your finances and ensures your credit building progress isn't derailed by mistakes or fraud. If you find an error on your credit report, dispute it with the credit bureau right away. Provide documentation to support your claim. Correcting mistakes can quickly improve your credit score and ensure your report accurately reflects your financial behavior. Identity theft can ruin your credit before you even get started. Protect your personal information by using strong passwords, shredding sensitive documents, and being cautious online. If you suspect identity theft, contact your bank and the credit bureaus immediately to minimize damage. When you start using credit, it's important to understand how interest rates work. If you carry a balance on your credit card, you'll be charged interest, which can add up quickly. Always try to pay your balance in full each month to avoid paying extra in interest and keep your credit building efforts on track. Payday loans might seem like a quick fix, but they often come with extremely high interest rates and fees. Using payday loans can lead to a cycle of debt and hurt your credit. Instead, focus on building credit with safer products like secured cards or credit builder loans. It can be tempting to spend more than you can afford when you get your first credit card. Remember, credit isn't free money. Only charge what you can pay off in full each month. Responsible spending is key to building and maintaining good credit. Using credit responsibly means making purchases you can afford, paying bills on time, and keeping balances low. These habits will help you build a strong credit history and avoid debt. Responsible credit use is the foundation of long-term financial health. After you've used your credit card responsibly for a while, you can ask your issuer for a credit limit increase. A higher limit can help your credit utilization ratio as long as you don't increase your spending. This can give your credit score a boost over time. Your credit report is a detailed record of your credit history, including accounts, payment history, and inquiries. Lenders use this report to decide whether to approve you for credit. Reviewing your report regularly helps you spot errors and track your progress as you build credit. As a consumer, you have rights when it comes to your credit. The Fair Credit Reporting Act gives you the right to a free annual credit report and to dispute errors. Understanding your rights helps you protect your credit and take action if something goes wrong. Building credit isn't just about borrowing money, it's about creating opportunities. Good credit can help you qualify for better loans, lower interest rates, and even some jobs or apartments. Use your credit wisely to achieve your goals and improve your financial future. Building credit takes time. Don't get discouraged if you don't see results right away. By following good habits like paying bills on time and keeping balances low, you'll see your credit improve steadily. Patience and consistency are key to long-term success. As you build credit, celebrate your progress. Maybe your score goes up, or you qualify for a better credit card. Recognizing these milestones keeps you motivated and reminds you that your efforts are paying off. Every step forward is a win on your credit journey. The more you know about credit, the better decisions you'll make. Read articles, watch videos, and ask questions to learn about credit scores, reports, and responsible borrowing. Education is a powerful tool for building and maintaining good credit. If you're unsure about any part of the credit building process, don't hesitate to ask for help. Talk to a trusted family member, financial advisor, or credit counselor. Getting guidance can help you avoid mistakes and make smarter choices as you build your credit. Building credit is just the beginning. As your credit improves, think about your long-term financial goals, like buying a car, getting a mortgage, or starting a business. Good credit will help you reach these milestones more easily. Start planning now for the future you want. Once you've learned how to build credit, share your knowledge with friends or family who are just starting out. Teaching others not only helps them, but also reinforces your own good habits. Together, you can create a community of financially responsible individuals. Keeping your financial documents and accounts organized makes it easier to manage your credit. Use folders, spreadsheets, or apps to track due dates, balances, and payments. Organization helps you avoid mistakes and stay on top of your credit building journey. Set aside time every few months to review your credit progress. Check your credit report, look at your score, and see how your habits are paying off. Regular reviews help you stay motivated and make adjustments if needed. It might seem like a good idea to close old credit accounts you don't use, but keeping them open can actually help your credit score. Old accounts add to your credit history length and available credit, both of which are good for your score. Unless there's a fee, keep those old accounts open. Some companies promise to fix your credit quickly for a fee, but many are scams. You can build and repair your credit yourself by following the steps we've discussed. Be cautious about anyone who guarantees results or asks for payment upfront. Credit rules and products can change over time. Stay informed by reading reputable sources and keeping up with news about credit and finance. Being aware of changes helps you make the best decisions for your credit journey. To sum up, building credit from scratch is a journey that requires patience, responsibility, and knowledge. Start by opening accounts, using credit wisely, and paying bills on time. Monitor your progress, avoid common pitfalls, and keep learning. With consistent effort, you'll build a strong credit foundation and unlock more financial opportunities in the future.